The New Zealand property market has been booming ever since. Property prices have been skyrocketing until late 2021 as the historically low interest rate has attracted buyers. However, the table is about to turn as the interest rate is about to increase significantly and we are about to see the property market cooling down. Property prices in New Zealand have started to fall due to various factors and we will be going through them one by one. Before we talk about the interest rate in New Zealand, we are going to talk about the US. The US has the world's largest economy and it has an impact globally when they make a decision that affects their economy. The US Federal Reserve has approved the first rate hike in more than 3 years in March and we are expecting to see 6 more ahead in 2022. The current US Fed fund rate sits at 0.5% and it is expected to increase to 2% by the end of 2022 according to FOMC participants' assessment of appropriate monetary policy. This is one of the main factors that the Reserve Bank of New Zealand will have to consider when they are making a decision on the official cash rate. At the moment, New Zealand's official cash rate sits at 1% after it has increased by 0.25% back in February 2022. If the US Fed fund rate increases as per the FOMC meeting back in March, then it is very likely that New Zealand's official cash rate will follow the increasing trend. With the increase in the official cash rate and the expectation of the rate increase, the main banks such as ANZ, ASB, BNZ and Westpac in New Zealand have started to increase their interest rate on loans. What this means for us is that the mortgage rate will continue to increase and this will affect the property market significantly. Homeowners who are servicing the mortgage will have to spend more of their disposable income on mortgage repayments. Let's have a look at this example. According to the Real Estate Institute of New Zealand, the average house price in New Zealand is $885,000. If you are to buy a property with a 20% deposit, you will need $177,000 as a deposit and have $708,000 on a mortgage. As of today, which is the 4th of April 2022. The cheapest one-year mortgage from main banks sits around 3.99% and the 2-year mortgage rate is 4.55%. If you have purchased a house after years of grinding your deposit, now you will have to pay around $779 per week to service mortgage repayments for the 1-year fixed-term mortgage rate. The mortgage rate is expected to increase rapidly up to 5 to 6% for a 1-year mortgage rate according to ASB Home Loan Report, and what this means for us is that we could potentially be paying $979 per week on a mortgage repayment in near future. This is a significant amount as the minimum wage take-home pay is $715 after tax. Stuff.co.nz also has reported that the recent Reserve Bank analysis showed that if the mortgage rate rose to 5%, nearly 20% of recent first home buyers would face serviceability stress. At 6%, this would rise to nearly 50% and investors and some existing owner-occupiers would also be under pressure. This increase in mortgage rate will put downward pressure on property prices as the demand for purchasing property will decrease as servicing mortgage repayment would be financially stressful for the years ahead. Recent first home buyers, investors, and some existing owner-occupiers might even be forced into a position where they have to sell their properties due to financial pressure. This will lead to an increase in the overall supply of the property in the market and a decrease in the property price. In New Zealand, 2 main factors determine population growth. The 2 main factors are the organic growth of the population and immigration. Organic growth of population involves net birth minus death rate and this has not changed significantly in recent years. However, the one that we need to look at closely is the immigration numbers. The New Zealand government has been limiting the inflow of overseas travellers and immigrants to control the COVID-19 pandemic. This has resulted in a decrease in the population growth rate. From the table provided by StatsNZ, you can see that the net migration number was 10,117 in March 2020, and since then the migration number has been extremely low. There even were some periods where it had a negative net migration numbers. We should also look at the statistics for new dwellings consented. As we can see from the graph provided by StatsNZ, it is at a record high of 4,226. So we now have a decrease in population growth and an increase in housing supply. These factors will cause downward pressure in the property market. According to StatsNZ, the Consumer Price Index increased by 5.9% from the December 2020 quarter to the December 2021 quarter. This was the biggest movement in the Consumer Price Index since a 7.6% annual increase in the year to the June 1990 quarter. What does this mean for us? This means there have been price increases in the goods that we purchase on a day-to-day basis. We will have to spend more of our disposable income on necessities such as food, clothes, health care, and petrol while servicing mortgage repayment or paying rent, which is about to increase significantly as discussed earlier. If the cost of living does increase by a significant amount, demand for the property will decrease as the bank will be reluctant to provide a home loan, which will be discussed shortly. Recent first home buyers or existing homeowners might experience financial hardship as well. This will be another factor that will create downward pressure on demand for the property market. Back in December 2021, the Credit Contracts and Consumer Finance Act, CCCFA, was introduced in New Zealand. This act required lenders such as banks to act responsibly at all times and provide protections for borrowers by limiting how much they can borrow. When people heard this news just before December 2021, everyone rushed to the property market as they were scared that they won't be able to take a loan out from banks, which heated the market up for about 3 months. Since the CCCFA has been implemented, the home loan application process has been extremely hard. Some people who were able to borrow $1 million were now only able to borrow $800,000, and some people were getting their home loan approval declined. This has affected the property market significantly, and it has put downward pressure on property prices as the demand has decreased due to CCCFA. In conclusion, the property market in New Zealand is currently experiencing significant downward pressure in property prices due to the incoming mortgage rate increase, limited population growth, record high housing supply, skyrocketing inflation rate, and government policies. The outcome of the combination of these factors is already showing in some of the areas. According to wanaroof.com, the average property price in Mount Roskill, a suburb in Auckland, has dropped in price by 11.6%, which is $166,000. The downfall of the property market in New Zealand has just started. This is Schwartz TV. Please share with us your opinion in the comment section below on your expectation for the property market in New Zealand in 2022 and onwards. Thank you for watching Schwartz TV. Please like, share, and subscribe.